Welcome back, everyone, to Vox Markets. My name is Paul Hill, and I'm delighted again to be able to speak to Iain Staples of Schroders, one of the UK's finest fund managers. So welcome, Iain.
Good morning. Thank you for the intro.
Yeah, well, there's a lot of angst at the moment for investors, and not least the sort of ongoing war in Ukraine, sticky inflation, and now the recent banking crisis. So putting all that together, what's your sort of outlook for equities at the moment?
Well, I think it's always very difficult to sort of keep not so much a clear head, but to sort of keep a longer term view when you're getting daily hits from either recurrence of horrible events in Ukraine, as well as nerve shredding news coming over from either California or one of the most boring countries on the planet, Switzerland, when you see a run on one of its most famous banks, and it's digested in the weekend by one of its largest rivals. So I think it's quite to say it's certainly an interesting moment in sort of the equity market cycle would be an understatement. I think it's the sort of valuations that we're seeing and the sort of de-rating that's been applied to many small and mid-cap stocks in the UK has been quite spectacular. I mean, before the banking crash, I think, not crash, but the banking concerns and the banking runs, the average PE in the UK small cap index went from 22 times in 2019 to just shy of 10 times for 2022. So you've seen an absolutely heart-rending fall in the worth of stocks. And I think it's all too easy to forget that there are very good companies in the UK with good balance sheets and world-leading business models that, for one reason or another, currently the market is choosing to ignore. Coupled with that, you're also seeing a evaporation in liquidity. So even if the price on the screen is telling you something, it's almost impossible to build up any sort of a sensible stake. So it's really trying to determine what you think a company's prospects can be over the next 12 to 36 months with that business model, with that good balance sheet, and let the share price do what it does, but just tell the company to keep doing what they're doing, because they're doing an exceptional job in often very tough circumstances.
Yeah, well, you've certainly got plenty of excellent stocks we're going to cover a bit later on. In terms of sort of like, portfolio construction and sort of sector alignment with the go forward conditions. I mean, I did notice you've avoided most of those banks. In fact, I don't think you've got any sort of banks at all in your portfolio. In fact, I think more broadly, Schroders hasn't got that many either. So that's obviously that's been pretty beneficial. But in terms of sectors and portfolio construction, what sort of like are you sort of mainly interested in? Is it sort of your high gross margins, sort of like secular growth trends with pricing power? I mean, where are you looking?
Well, really, pretty much. I look pretty much anywhere apart from financial services. We got it's publicly available information that we've had a long-term stake in Boku. That's doing exceptionally well around the globe. Had a very successful, well-received capital markets day recently. But pretty much in terms of the more, shall we say, traditional financial institutions, we have a stake in Paragon Bank and in one Savings Bank, where they have made an excellent business over the last 2 to 3 years of having very good, flexible, but tough underwriting standards. So as the buy-to-let market in the UK has professionalized and the sort of 2 to 3 house landlord has largely exited the market because the rules, quite rightly, are too tough and it's just not worth the hassle, the likes of Paragon and One Savings Bank are more than happy to take on 20, 30, 40 landlord, or 20, 30, 40 property landlords because it's professionally run, and One Savings and or Paragon take a lot of care to understand the dynamics of each landlord's portfolio. But that's sort of quite higher up the market cap schedule than perhaps we normally go hunting.
Yeah. One other one in this sort of the fintech space, which came out with some blockbuster results today, was EQLS, which I know you've sort of like doubled your stake last year, which was again very well done. Big pat on the back. you want to take us through this one? Because they gave some numbers out today where their like-for-like sales for quarter to date, that's the first quarter, we're up 54%, and they made a bit of a transformational acquisition out in Belgium as well, Unex, I think. So do you want to take us through what your latest thoughts are on there?
Yeah, I think it's always nice to talk about a company that's put through a 10% EPS upgrade.
Yeah.
On the day of an interview or a day like a conversation like this. But I think it's a nice half volley outside off stump. But I think sort of more seriously, it's good to get a sense of context. And I think it was the conversations that we had with the current CEO, Iain Strafford-Taylor, over the last sort of 18 months, 2 years, in which he was explicit in talking about how he was going to use the power of technology and classic fintech, would be to build relationships with the banks, thanks to his background in retail banking, but then make it very easy for corporates and SMEs to be able to transact in a very transparent way with their bank or with their counterparty or customer, supplier overseas, and just make it very simple. The thing is, when you need to make it very simple, it's actually very difficult to do to make it look easy.
Yes.
There's an awful lot of plumbing underneath behind the EQLS software, though they communicate with the various banks. It's a bit like Boku. Okay, a very different business model, but actually it's that hard work that they've done with sort of legacy systems at the banks that allow them to make it look very easy for their customers. So in terms of the reconciliation, the ledger processing, EQLS has worked very hard, while the IT team, developer team, has worked extremely hard to build up a great solution. And now the efforts of the entire group, thanks to a lot of strong marketing and it just works, is beginning to reap rewards. I think there might well have been sort of the fact that EQLS takes no principal exposure itself, unlike perhaps other companies that are quoted on the market with respect to FX transactions in particular, makes it very interesting. Also, the fact that the acquisitions that you've highlighted, some strange names, one's called Unex or something, wasn't it?
Yes, Unex is the Belgian one, beachhead into Europe.
Yeah, and so it's very interesting that a company like Unex might well have a set of relationships that EQLS could never once sort of replicate, or would take a long time to replicate. But perhaps Unex has come up against its own sort of scaling problems or whatever, or scaling issues, couldn't find the people, which EQLS has in abundance. So it's a great complementary fit. And I'm looking forward to catching up with Iain in a couple of days' time.
Yeah, no, I mean, I would agree. Good tick in the box. Another one in that sort of the fintech space is Fintel, which came out with some really quite positive results, and its sort of cash position is mushrooming as well. I think it's got 12 million of net cash, and it sort of like acts as a sort of like a digital intermediary sort of help data provider for IFAs, and also for distribution for a lot of product providers like Aviva and stuff like that. So do you want to take us through your latest thoughts? Because in comparison, it's about comparison with potential M&A. I mean, there was Euro money bought for about 21 times EBITDA about 18 months ago, and this one trades at less than 10, I think.
Yeah, I think this one's beginning to sort of come into its own because of the independence of that data. I think as people become ever more not frightened, but want to depend on independent data that's rational and trusted and actually generated by sort of the wisdom of crowds, if you wish to call it like that. I think Fintel's in a great spot. I think the fact that they are so highly cash generative means that they're going to be, there's no concerns about them not being here this time next year or the year after. It also points to the strength of the business model, that they can convert a lot of their profits, or most of their profits, into cash. And also this great set of relationships, this brand and reputation which they enjoy in the intermediary market. I think they've got a great market position to continue to develop further.
I think Schroders is actually a customer, isn't it? So you get a particular insight.
Doubtless, I have to be very careful what I say. I can say
Yes,
we own the shares.
Yeah, well, true, but it gives you a great insight into how good the quality of the business is and the software. So
yeah,
you're certainly doing your due diligence there. Yeah. Now, just moving on to sort of healthcare, and this is what I don't own myself, but I'm really interested in as well, is EKF Diagnostics, because the shares have come off. It was did brilliantly during the COVID pandemic and helped everybody doing the testing and stuff like that, and built up a good sort of cash balance, and is really sort of cashed up on its balance sheet. But it's sort of like had a couple of struggles in terms of bringing on some enzyme making equipment out into the US. Do you want to take us through your latest view on this one? Because again, it looks baby in the bathwater stuff.
Yes, I think as well, we own the shares. We agree with that statement. I think again, perhaps a little bit of context. There was a new chief executive appointed towards the end of the pandemic, towards the end of the lockdown, and he said, okay, we got a great position in medical devices, highly cash generative, but he had a background prior to EKF, as you say, in enzyme fermentation, and put a compelling case forward that the same could be done for EKF. There was some sort of redundant or stranded assets which he picked up for a song, I think it was in Florida, and put out some quite bullish targets for this business, whilst maintaining the rest of the group chugging along. I think he went away and started doing it. 9 months later, he wasn't going to hit the timetable, and the chairman, or the major shareholder, certain Mr. Christopher Mills, so, well, you've had your chance, son, you fluffed it, go away and fix the mess you've made, but you're no longer chief executive of the group. So Julian Baines came in as, he was non-exec chairman, I think, came back as executive chairman to steady the ship. And the good doctor was sent off to Florida permanently to fix the job. So I think the fact that you've got quite a strong shareholder in Christopher Mills, I can't remember his stake, I think it's 29%.
Yeah.
Means he's not going to tolerate any more shilly-shallying. So we're looking forward to catching up with Julian and the team to find out the status of the enzyme fermentation project.
Yeah, I think there's some results this week, and likewise, I'll be casting a good eye over that one, because it looks a very good value play, that one, for sure. Yeah. Now, another one in the sort of the healthcare sector, Poolbeg Pharma. I know it's a sort of early stage business that does sort of like new candidates or drug candidates for basically for infectious diseases, I think, and particularly for where bodies or humans respond poorly to sort of like drugs or certain conditions, and you have an immune response, etc. Do you want to take us through what the long-term sort of picture is of Poolbeg?
Well, I think the fact that it's got this access to, as you point out, to the knowledge and clinical data from Open Orphan, and they use those. There are more than 20 years of human challenge trials from that company, and actually exploit them in a commercial way. I think the fact that you're at a clinical stage of developing an antidote or a treatment for infectious diseases, plus this 20 years of data, it's just crying out for that to be crunched, analysed, and put forward for its customers to be able to develop a solution for the drug companies around the world. I think it was a bit of a darling during COVID, because everyone was interested in infectious diseases. The world changed, share price got created. There's some skepticism about the durability of the business model, perhaps some well-founded criticism about perhaps making a lot of noise about using the data and then not delivering. But since the start of the year, under the chief executive, Jeremy Skellington, they've really put forward a good, strong plan for these clinical stage of infectious disease sort of profiling that is based on data and is worth something. So I think over the next 3 to 5 years, as that body of expertise continues to grow, plus the reputation for actually being able to deliver solutions, I think Poolbeg Pharma is perhaps in a higher risk, higher reward category, but it's certainly a fascinating company to have a look at.
Yeah, and it's certainly an unmet, sort of like need in that healthcare area of sort of, immune response, adverse immune response to infectious diseases. Now, moving on to sort of like an area again, which is pretty topical, this is defence. And a company that I'm sure most investors haven't really looked at is Cohort. And I was listening to the BBC this morning, and I heard reports of a Russian nuclear submarine sort of like tracking a lot of the oil pipelines in the North Sea on the Norwegian side of it, and likewise we've got all the Chinese submarines which are out in the East China Sea. And I understand it that Cohort is a real expert in all things electronic warfare, but also sort of anti-submarine sonar sort of tracking technologies.
Yeah, it's real James Bond stuff, but it's in the manner of old-fashioned Q. Sort of, we're damn good at it, but we just don't make a fuss about it, old boy.
Yeah.
And I rather like the team at Cohort because they've got sort of several legs to their business, where they both have a reputation for expertise in training men and women who want to fly the planes or pilot the boats to go out and get the baddies, as well as some really very exciting telecommunications and scanning technology, which lets us track down the baddies, quite frankly.
Yeah.
And it's one of those sort of quiet success stories. They're very, very good at what they do, but they don't like making a fuss about it. I think the fact that they've got these legs, sometimes one of the legs, like in any portfolio, doesn't quite kick on, but they've been slowly improving the quality of each of the legs, so it's quite a toned machine now. I'm rather pleased to be a shareholder. And I think also, sort of bigger picture, I think the fact that whilst governments haven't committed or just they've repackaged the numbers of committed defence spending, apart from, of course, the United States, I think the world has changed thanks to the Ukraine war, in that for the next 10 to 15 years, there's just going to be a completely steady stream of work for the likes of Cohort that no one hasn't really quite understood yet.
Yeah, no, you're right.
Because of the concern that you highlighted just at the intro to Cohort, but it's sort of that accumulation of concern about Russian submarines going after the gas pipelines. But actually, if you were a long-term thinking PM or chief of the defence staff in the UK or whatever they call themselves in France or whatever, you'll be saying, right, we got to spend money for each year of the next 10 years. We need this kind of kit to make sure we can defend our citizens.
Yeah, and expertise. Yeah, I think being in the sort of like the cyber warfare and in the sort of anti-submarine, the sonar sort of area are real hot spots in that whole sort of like sort of defence area. And with that particular business, to say the way it's run, it's sort of shaken, not stirred, isn't it? So it's certainly doing it's certainly doing pretty well. Now, another one which is or another area that is really was pretty much solid is sort of like infrastructure and sort of like all that sort of stuff. Now you've got three companies. First of all, you got Renew. Do you want to take us through this one, because it's really benefiting, I guess, from things like nuclear, I imagine, and other types of big infrastructure, because it's a sort of like a expert in all things engineering and helping that critical infrastructure, I think. Yeah,
this is another favourite because of the strength of its relationships. It does some work at Sellafield, but if my memory serves, that's not the biggest part of the business, but it's got work for the next 20 or 30 years looking after the dirty but made safe bits up in Cumbria.
Yeah,
I think perhaps more interestingly, they've made a very good business out of doing hard to do civil engineering. I never appreciated that if you want to work on the railway and just swing a hammer at a rail, it actually takes quite a lot of work off-site before they even give you your boots and your hard hat.
Yeah.
And if you want to, muck around's the wrong phrase, but if you want to work on the pantographs or the bridges across the West Coast Main Line or the East Coast Main Line, then you need an even bigger set of qualifications and controls. And that's not just the company, but that's all the men. It's mostly men that choose to work on the railways at 3 a.m, shifting stuff about, they're actually quite highly qualified, and concomitantly, the pay is very good for the civil engineering sector. And it's the same for bridges. They do work in water, but it's not just sort of digging holes and putting stuff in. This is actually changing or helping fixing sometimes bridges that were built by the Victorians more than 150, 160 years ago. And Renew are the only ones with the qualifications that can go in and fix it and keep the country going. They had some, I think, not so much issues, but they've sorted out contract timings and relationships with the big framework providers. So now their cash flow is simply superb. They do have work. Of course, they have working capital, but that's largely been minimised thanks to the hard work of the team. And also, they do some quite sort of exciting stuff. They were the company. They are the company that's fixing the roof at the Houses of Parliament, taking the asbestos out. I was lucky enough to go up the Elizabeth Tower, see Big Ben. So they're doing some quite sort of quite very impressive, high-profile work. And given the excellence of the engineering and the quality of the numbers, I think the company should be more highly rated than it is.
Yeah, I mean, it's only on, well, it's less than 12 times PE, and it's got a net cash balance. So, yeah, I'm with you. I mean, it looks a very attractive sort of, long-term value stock. Another one in that sort of area is VP, which Yorkshire-based sort of like equipment rental business that is trading at about 8.5 times PE, which is just looks really strange. And I think its largest sector is infrastructure, and then sort of construction. It has a bit of housing and energy and stuff. Do you want to take us your latest thoughts on this one?
Yeah, well, I'm the same. Nothing's really changed. The team has been very, very stable over about the past 10 years.
Yeah,
and in the best possible way, it's run as if the current CEO owns 100% of it. There's no sort of short-term decision making to try and produce a pizzazz. It's actually, I want to be here, or I want the company to be in an even better position than it's in now in 5 years' time, and I'm going to make decisions with that motivation at the forefront of my mind. So again, there's sort of that provision of specialist equipment. So if you're if you're Keller and you're digging a very deep hole in clayey soil, you need particular types of special kit to keep the walls from falling in. That's the type of kit that VP can rent, rather than it's sitting on the balance sheet of Keller. And I just think the upkeep they have on their kit, the pricing power is strong. And really, as you point out, the infrastructure play and sort of upgrading the UK to keep us hopefully somewhere near match fit is essential.
Yeah, and as I say, it's such a good valuation. It certainly looks attractive for people with anything more than a sort of like a 5 nanosecond time horizon. Yeah. And one which is sort of like had a recent profit warning is Trifast, which does sort of like all things sort of fasteners. And I think it had a problem with the sort of customer destocking out in Asia. Do you want to take us through your latest thoughts on if that's a sort of like a one-off or whatever? Because again, it's on a 10 times PE ratio now.
Yeah, it's perhaps a bit of history. It last had a stumble about 11, 12 years ago.
Yeah, I remember that. Yeah.
Do you remember?
Yeah.
And a new management team came in, tried to ignore the sort of the traditional conservative way it had been run, almost drove it into the ground. So then the old team came back, kicked out the new team, fixed it. And basically, I had a very good run from about 2013 onwards. COVID hit just before COVID lockdown started. They started a very measured but very determined implementation of an ERP system called Project Atlas, which, as far as I can understand, hasn't caused them any problems because it was done over a 4 or 5 year period. But I think that, combined with lockdown and COVID, the disruption to supply chains because of both lockdown and the Ukrainian war, and the fact that they are supplying white goods manufacturers with fasteners, I think the cumulative effects of lockdown in Ukraine, as you said, triggered a destocking at a significant Asian customer. And I just think the cumulative effect of everything led to the management team being overstretched and took their eye off the ball. And the CEO, who's a fantastic chap, had been the FD under the sort of the new team that came in all those years ago, just said, I've had enough. So I think I'm meeting the new CEO later today, actually. So we'll see what he thinks. Any management team will swear till they're blue in the face that it was a one-off. I think sometimes customers just do destock. Sometimes if you're surprised, it's because you have taken their eye off the ball. Perhaps they're overstretched with the cumulative effect of the past 3 years. Who knows? But really, that's more of a challenging special situation to see what the ambition of the incoming chief executive is. That will take some careful analysis.
Yeah, I mean, it's difficult, isn't it? I suppose if it is destocking at one particular customer, you would naturally think across the whole sort of like industrial complex, particularly out in Asia, there'll be a number of other customers or that whole industry would also have sort of those, sort of just destocking. But I suppose with China reopening at the start of the year in H2, we should see a rebound of all things manufacturing. So, but you're right. I'll be interested to hear what you come back with. Another one which has had a sort of like a couple of one-off was Tribal, which basically does sort of software for the higher education, largely universities in England and Australia, and has got some really blue chip customers, most of the sort of say that the universities, etc. But has had a sort of like a real problem with one of its largest, or it probably is its largest contract out in Singapore, which I think has now terminated it. So it's that Singaporean university. What's your sort of latest view on this one? Because again, the shares have come down considerably, and they're trading at about what is it, Tribal? Well, 10 times, again. So for a SaaS software business, that's pretty cheap.
Yeah, I mean, they've got sort of a 10% growth in their annual recurring revenues to just north of 50 million quid. They've got an excellent pipeline. They've got an excellent reputation for delivery on time and on schedule, which for sometimes quite bureaucratic institutions, not just in the UK but elsewhere, is an impressive stat. I think the fact that this contract has been terminated by a university in Singapore obviously isn't great, but they still managed this 10% growth. Excluding that, including that, sorry, I beg your pardon, it's 13% excluding the NTU university. So I think this impact is having a far greater sort of perception that there's something wrong with the product than is actually the case. I think at the moment, the company has tried, I think, quite a sensible, what you might call Anglo-Saxon attitude, trying to be pragmatic and talk to the other side of the contract and say, let's find a way out of this impasse. And the law in Singapore does allow you to do that, but it also gives quite a strict process in terms of, this is our position, you write down your position, let's go to a mediator, and then we'll argue about it in front of a mediator. And that's the position that the university's taken. So Tribal's here saying, we don't know how much it's going to cost us in legal fees. We've costed for £5 million in terms of, or £4.8 million, I think it is, in terms of the impact of the contract, or the contract being terminated by the other side. But let's try and work it through. But they don't know what the timings will be, how the mediation process will go. And they've been very open, saying, we haven't been in this situation before, and we're currently seeking out the best legal advice we can in Singapore.
Do you know what actually went wrong with that at all? I mean, is it just poor implementation, or just?
Well, they said that in any software contract, there's work that is in scope to contract, and then there's sometimes work that the client asks for that is out of scope. You negotiate very carefully and very hard with the customer, and funnily enough, they negotiate very hard and very, very straight with out of scope work. They came to agreement about out of scope work, both sides, legal agreement. The work was then carried out, and then the university said, I'm not going to pay for out of scope work anymore. Wow. I don't know what the amount of this out of scope work was, what proportion of that was in scope. That's commercially sensitive. But I just think the impression I get was that once they refused to pay for the out of scope work, the relationship broke down even when they tried to complete the in scope work. So the university cut its losses and said, we're not paying anymore, full stop.
Wow. I must have left the university. Must have left the university right at the paddle
of the creek
without a paddle, because if they're on their old system or they haven't got a system, I mean, then whatever anyway. But
maybe for example, it's sort of there was an implementation. I don't know what the complexity compared to the Singaporean university, but Tribal did an implementation for, I think it was Birmingham University, in the PowerPoint pack in less than 5 months, and it was a great success.
Yeah. It just doesn't seem. It just seems a total sort of like idiosyncratic contract that has brought the shares down. But anyway, another one in that education area that is RM. That I know a lot of other companies that the fund managers are also very interested in it. And I think it just had a bit of a problem with its ERP system. I think at one stage it's got a new CEO, hasn't it, Mark Cook, who's coming. Do you want to give us your latest view on this one, because it again looks like baby in the bathwater over a one-off issue?
Yeah, I think you've got to be careful with this one. We're very disappointed with this one.
Okay.
The previous CEO undertook an ERP implementation.
Yes.
About just at the start of COVID lockdown, I think. And then the company itself has an excellent reputation in assessment and educational supplies to schools, and really was quite a sort of not the most exciting thing on the planet, but you always want sort of pencils and goodness knows what rulers and books going into primary schools and secondary schools up and down the country. They decided to change this ERP, and during lockdown, I don't think the company's processes were sufficiently rigorous before the implementation. And very often, when you haven't got optimal processes in place before an implementation, the temptation is to say, well, let's change the processes to fit the ERP so it goes in easier. But if your processes are flimsy anyway, the ERP will balloon and you would lose control. And this is what happened at RM. Now, I think a figure in the public domain that sticks in my mind is about the cost got up to about 35 million.
Yeah.
In terms of the sort of the capitalized and the expense cost trying to install this system in what is essentially an educational suppliers business, plus some very clever marking technology for multiple choice questions in GCSE and A-level, which is absolutely ludicrous when you compare it to a market cap of 60 or 55 or whatever it is.
Yeah.
So that previous CEO had to go, and the reason I urge caution on this one is because we're in a bit of a limbo situation about, I don't yet understand fully the plans of the new CEO, what he's found on coming into the group, and how he intends to clear up the Aegean stables. It's a Herculean task. He's either very brave or very foolish. He might be very clever as well, but we'll see.
Well, as long as it's got a pretty stable ERP system, I agree that it takes a bit of time to fix it all. But that is a self-help measure. It's not a demand issue. Your demand
that's true. Yep.
Should be okay. And as long as you take a fairly sort of like conservative approach in terms of the cost you're going to incur and what timescales, then if you know what you're doing, you should be able to get it right. But it is painful. There's no doubt about it. If you have your stocks in different places, or you've called your stock certain things and it's actually something else, I don't know. Now moving to all things sort of like technology. There's a couple of companies that have got sort of really moving into sort of profitability. Let's start with Activeops, which does sort of like workforce management software for really quite complex tasks at banks and also insurance companies and business, I think, process outsourcers, things like anti-money laundering and also know your customer sort of checks and stuff like that. Do you want to take us through this one? Because it does seem as though it's now reaching an inflection point.
Yeah, this one is for me. It's always been a fascinating one. This because this is essentially a very clever piece of software which allows for workflow automation, as you say, through financial institutions such as banks and insurance companies. And what it allows to do is to say, if there are various teams that are processing, for example, overdraft applications or car insurance, or whether you don't pay in checks anymore, but other sort of heavy intensive tasks in a retail bank, very often they'll have 2 or 3 teams of people, say 60 or 70 people within each, and they'll throw in the work, not really knowing the nature of the work apart from it's an overdraft application. And the teams chunder through it. Now, some applications are more complicated than others. You might well get that you've got team A at 90% of utilization, you've got another team B at 60%, and you're getting what are essentially quite repetitive tasks, done 5 days a week. People, us being humans, we haven't yet figured out how to completely automate stuff. If you're doing the same thing day in, day out, then you get quite, you get sort of not bored, but you're not as perhaps sharp as you should be. What Activeops does is to very, very efficiently allow, say, well, if you're a junior, you need to learn, so just get on with it. After about 9-12 months of doing this, you'll be very good. So let's only give you the hard stuff. Now, if you're in Team A, you'll be running at 80%, but Team B's running at, say, 50%. Well, let's shift some people from Team B into Team A and make this sort of the overall optimization or utilization at 65%, 70%. So everyone's more balanced. You get more varied, interesting work. And funnily enough, productivity is high because most people are much happier.
Yeah.
So this software is, I like to think of it as a huge sort of timetabling but flexible piece of sort of knowledge software almost, that knows sort of the attributes of the employees doing these repetitive tasks and can actually shift between the teams and the tasks that come in to allow people to actually get a more interesting 8-hour day when they go into their place of work. I think the fact that you're seeing more business process outsourcing plays to Activeops when they see how great the software is, and you can actually measure the cost savings because you see this utilization, which is what Activeops can do. I think Activeops is utilizing the trend of sort of inhumane processing power that's now available inside a computer box to deliver a good outcome for everyone.
Yeah, I mean, that whole sort of like requirement of improving corporate productivity and labour, etc., has got to be a winner. And if they can ever, well, they will presumably overlay some generative AI on top of that at some point, which again will improve the benefit to the actual user. So yeah, I'm with you. Now another one which is perhaps sort of 6 months, 12 months behind in terms of its path to profitability is Essensys, which does all things sort of like digitalization for broadband provisioning and all this sort of stuff for the biggest office buildings in the world. So these huge 150-story skyscrapers out in New York. And do you want to take us through your latest view on this? Because they do seem to be accelerating that path to profitability. I think the CEO, Mark Furness.
Yeah, that's right. They had they floated relatively recently in the midst of lockdown, raised something I think just around £30 million. So the balance sheet's solid. There's a great deal of skepticism, I think, towards the company because the market cap isn't much more than that.
Yes.
But as you say, it's moving towards profitability now. During the latter parts of lockdown, there was some lengthening of sales cycles. by these larger landlords, which you described, which was reflected in there's a slowdown in Essensys engaging some of these clients. Now that was taken by the market that the landlords didn't want their products full stop, as the marketers want to do. So you have to accept what the market thinks and sort of think, well, what's next? I think the move to hybrid is going to have a far sort of greater impact long term, rather than perhaps a short term impact about us staying at home, or most of us staying at home on Mondays and Fridays. I'm at work on Monday; it's great. So I think this impact, this demand for landlords being able to sort of shift around space and manage space optimally, for companies that are saying, well, I no longer need 5 floors in your skyscraper. I actually only need 2.5, but I want really flexible spaces, and this is how I want to control the broadband. This is how I want to control the aircon. This is how I want to control security. I only want the chief executive and his executive assistant to get into this one room, and I want 3 people plus the chief executive to be able to get into this room. So being able to actually manage all this is actually highly complex. I didn't appreciate there's anything between 20 and 100 different IT systems running a skyscraper. So you also want to talk about access for lifts, very important, sort of for those who are unfortunate, not as lucky as you're in a wheelchair. You want to be able to manage access for those employees in a very fair way for them, just like everyone else. So this all adds complexity, which I think Essensys addresses and will continue to address in a very compelling way. They've got results later this week, so certainly very interested to hear from Mark what his plans are for the next 12 months.
Yeah, and if there's any, I know they're starting to take cost out and sort of defer sort of like some of the, sort of like the investment, and if they can accelerate that sort of path to profitability. I mean, it's trading at ridiculously low valuation, given the top line is growing for a SaaS business, isn't it? And it makes good strong. So the masses of potential. Now, another company in the tech space that I haven't really covered a great deal, has been around for some time, is Gooch Housego. Which I think is all things sort of like photonics equipment. And it looks at it does sort of like sort of devices for lasers and stuff like that. Do you take us through this one? Because again, it's been sort of sold off, I think, and it's getting into real value territory.
Yeah, it's been around for a long time. Gooch Housego, as you quite rightly say, it started and remains in sort of optics for high-end commercial and military aerospace, as well, of course, life sciences. I think the key point to note here is that the light is being used more and more in a very sophisticated way, not just in fiber optics, so we can sit down and watch Marley and Me on a Sunday night on Netflix or whatever.
That sounds exciting.
That's where a lot of the technology spend has gone. So each and every single household can watch what they want, or my daughter can watch what she fancies, and I have to watch Notting Hill with my wife. Sort of keep the household happy. And my son can go and zap 'em up with 5 of his mates from his bedroom. So there has been this vast investment in fiber optic technology, not just to the home, but also being able to process all those different signals. Now, that processing technology is one of the many things that Gooch Housego does, but also it started off life and continues to make them, but it's shifted the manufacture from Ilminster and Somerset out to China for a lower cost production, a thing called a Q switch. And basically a Q switch is a bit like the equivalent of, I don't know, when you were a wee lad in short trousers, you get the hose pipe on a hot summer's day, you put your thumb in the end, and then the pressure would build up, and then you let your thumb out for about a split second, you get a really strong jet of water.
I've done that many a time.
And then you go after your sister or another loved one, and what a Q switch does, instead of doing that once every 5 seconds with the hose pipe, it does it millions of times a second on a crystal in a laser.
Yeah, okay.
So the laser starts off low powered. This Q switch, this acoustic switch, equivalent of putting your thumb in the end of the hose pipe, seals it up. So the light sort of almost builds up, and when you let it go, it pounds out. But because it's light shifting at, whatever light shifts at, it comes out much more in a pulse. So it's much more powerful.
Yeah, okay.
So they were the world's best at manufacturing these high precision Q switches. They since diversified into other bits of funky kit managing these signals using light. So a while ago, various boffins realized, well, it's quite hard if you're using electricity, as in semiconductor chips, to send. If you're sending information, people can overhear it. It leaves a sort of a footprint. If you use light to transmit this information, this top secret data about where James Bond is, or sort of where you keep your nuclear weapons, it's impossible to hack into. Even if you got hold of the light itself, you can't. If you get the either end, this could be 5 miles, it could be 500 miles. You can get the electricity either end, but using light, that's almost game over in terms of being hacked into. So this emergence of photonics, both for transmission of information, but also using light as a very, very fast way to transmit information in a jet fighter, people are beginning to say, oh, right, we can use that in a very clever way in the latest. So all this sort of requires, this management of light requires high-end precision components and subsystems, which Gooch Housego is an expert in. Also, they use lasers a lot more in healthcare. Again, it's very important that the laser is accurate and is pointing where you want it to point. The surgeon, if you've got let's joke, you've got a mole on your back of your hand.
Yeah.
It's not great if the surgeon misses it, but okay, it's not a big deal. If it's somewhere else on your body, then it's a far more important and pressing question. So again, Gooch Housego allows sort of development of medical instruments using light and to be much more accurate. So again, this is a company that has continued to innovate. It's got a new CEO come in and has changed the manufacturing footprint. It's got operations, got a great reputation for some of the sort of national physical laboratories. And really, I just think it's a British success story that's been knocked down, I think, unfairly.
How much competition does it have? Because the one thing obviously it looks as though it's got world-leading sort of technology. Its margins are about 7.5% at the EBIT level, which for a world-leading technology seems a bit low. Is that just sort of like because they've been through some difficulties in terms of sort of like?
Yeah, there has been a short-term down in demand. So given the sort of operating leverage works both ways.
Yeah.
So unfortunately, we're at that stage now. But I'm of the opinion, given some of the trends we've talked about with respect to defence and health, that over the next 18 months, we should see those margins get back north of 10%.
Okay, good. Now another one in the prop techs area is Onthemarket, which is basically a property portal in the UK, but is also going into sort of like property technologies, etc., through its Glancy, and it's trading at about sort of like 7.5 times PE, etc. Do you want to take us through the latest one on this one, because the shares are about 70p?
Yeah, I think the rapid rise in interest rates because of inflation and the egregious money printing that went on during at the start of the lockdown has seen this one marked down very heavily. First of all, short-term concerns about the housing market. Who's going to want to use it kit now that we're not moving house anymore? Secondly, it's sort of a high growth, perceived to have been a high growth using this digitization. Therefore, when the interest rates become higher, people become a lot more skeptical about what's coming in the future. So it's really suffered a double whammy. In terms of where it is operationally, I think it's very sensible and what it's doing, diversifying into those digital services. But sentiment, because of the sort of the stagnation at best in the housing market, concerns about remortgaging and whatnot, have seen this one completely flawed.
Yeah, and I mean, it seems to have a rock solid balance sheet. It's got about 8 million of net cash. EBIT margins are about 25%, and it's generating cash. So, it just looks mispriced to me.
We're confident for its future.
Yeah, exactly. Now, just turning to sort of all things decarbonisation, a couple of sort of like, early stage businesses. First of all, Atome Energy, which I think is doing sort of like aiming to do green hydrogen and ammonia out in Paraguay and Iceland, whereby I think it takes electricity which is generated from hydroelectrics and then puts a plant on it to do effectively green hydrogen for transportation and ammonia. Do you want to take us through obviously it's an early stage business, but it seems to be in the right place at the right time.
Yeah, I think Iceland's geothermal and then Paraguay's the hydrogen.
That's it. Yeah. Sorry. Yeah, you're right.
No, don't worry. I get keeping all this in my head.
Yes, you're right.
No, I think certainly the availability of funds with interest rates changing like they have done, everyone's cost of debt has gone up significantly everywhere since the start of the year. The also concerns around financing because of the bank runs on the banks that we talked about at the start of this conversation. We'll see financing tighten. They are in the right place. Whether they'll be able to get follow-on funding at the reasonable rates or the same amount of appetite for something that's going to occur in the next only going to come through in the next 2 to 5 years is I'm not so sure sitting here in the end of March 2023 as it would have been perhaps in March 2022. But certainly in terms of the technology, you got some determination currently by the Paraguayan government to provide stability for the project to come to fruition. But as I say, I mean, even in times of 0.5% interest rates, this was a high risk investment. Now that the equity investing, just the investing backdrop full stop has changed. This is quite a challenging and high risk investment.
Yeah, they did actually get some money, didn't they, in December, I think, only 3 months ago at about £1.06. I think they got just under 3 mil. So it does show it's possible, but you're right, who knows what it's going to be like going forward. Another one which has raised quite a bit of money and is again early stage is Saietta, which basically does all things e-drive for 2, 3 and 4 wheel vehicles, whether you've got big trucks in the States, you've got marine outboard motors, but I think their main focus now is on the 3 and 4 wheelers out in India. That clearly is a massive market, and they announced a sort of like a quite a big joint marketing strokes supply chain contract with Met out in say in India. Do you want to take us through your latest view on this one?
Yeah, I think this one is very interesting. Of course it is, but I think it's sort of perhaps suffered trying to do too many things at once. It's got its manufacturing plant at Sunderland, which was picked up for a song because it was no longer required, I think, by Nissan.
Yes.
And so it has shown fleet of foot, which is what you want from a sort of a small cap entrepreneurial company. It's got its axial flux technology is world class. It can be fitted onto a motorbike. It can be put into a rickshaw for use in, as you quite rightly point out, in the rickshaws of India and Southeast Asia. And also they did a deal with a US heavy truck manufacturer where they can put the sort of a rather larger motor into a truck in it, and it can deliver the appropriate amount of torque to propel said HGV forward.
Yeah,
I think there's been some delays with the US partner, the heavy truck manufacturer, which is they raised some money during the course of last year. I think it was last summer to push forward this relationship with the truck manufacturer. But there's been some delays there, which has disappointed the market. It originally came to market to say wanted to improve the air quality in Southeast Asia because the predominant form of transport is diesel or petrol motorbike, which has a concomitant impact on air quality. So if you could produce a motorbike with an electric drive, you sort of help almost not instantaneously, but if you take a significant market share and you can make it the same price as a petrol motorbike, you'll help the air quality no end. And really, it's just sort of what is this beast becoming? What is the money going to be used for? The chief executive, Vic, he's taken a step back recently. We've got a new CEO in place, so it'll be interesting to see what he says after his review of operations to say where the company should go.
Yeah. I mean, there's no doubt about it. It's a huge addressable market, and if they can just get a small slice of that, then it's going to make a massive difference in terms of those other financials. Now, I suppose just finally, then moving to, I think it's the largest position in the Schroders portfolio is Quixant, which I think is again an expert in sort of like gaming technology, but also it bought Denistron a few years back, which did sort of industrial displays. Do you want to take us through the latest your view on this one?
Yeah, it had a tough time during had a tough time during lockdown because they suffered from a lack of components due to significant supply chain disruption, coupled with the fact some of their larger customers, Every and Ainsworth, who are both quoted on the Australian stock market, the casino operators, funnily enough, suffered a serious cutback in demand thanks to lockdown. So Quixant wasn't very well positioned for this. You could argue that not many companies are, but I think they themselves were surprised how quickly demand fell off, how they were supposed to deal with that in terms of product development and also managing of inventory. So they took the opportunity to have a much closer relationship with their important customers, which they quoted in their annual report and PowerPoint presentation. Like I say, Every, Ainsworth, and a couple of others down in Southeast Asia, in Macau, where of course there's huge amount of casinos and demand.
Yes.
And so therefore they've also then sorted out, tightened up their supply chain so that the sort of chips that they required, there's these NVIDIA chips.
Oh, okay.
And the GUI chips that have been used a lot in the AI because just the sort of Herculean, there's that phrase again, Herculean processing power these chips enjoy. They're in high demand, but Quixant's got that sorted out so they can actually continue to supply or develop and supply systems for their casino customers. So you've got a company that's come out of COVID an awful lot better than when it went in. You've got a lot of pent-up demand for people to go and enjoy themselves in casinos, both in Australia and the likes of Macau. So I think in the gambling side, that side of the business, much stronger and much better. You've got a great growth avenue. And then the Densitron touchscreen technology is what we all expect. No one wants to go pushing buttons anymore. So there's a whole load of legacy systems which need, for example, in broadcasting, there's a lot of apparently pushing real buttons.
Right.
Which Densitron can take out, both upgrade the software underlying it and put a touchscreen in place, and everyone gets a better, quicker, far more efficient use of time using the new kit.
Right. Okay. Well, this seems to have a pretty good secular growth drivers behind that one. So thanks very much, Iain, for your time again. Real good insights into all of those portfolio businesses. And if anybody wants to sort of like invest in the Schroders fund, how best to do it? The
best way is to, if you have an IFA, talk to him or talk to her. And if you haven't got that, please go to the retail section of the Schroders website, where every I is dotted and every T is crossed, and you can download as you wish the application form. Thank you.
Brilliant. Okay, and likewise, investors, if they want to follow any of the companies, then just hop onto the Vox website, and you can click and get all the information. And in terms of the ones we've talked about, straight into your inbox. So thanks again, Iain, and look forward in touching base in 6 months' time.
Thank you very much.